All right. Hey, everyone. It's Investment Tuesday. And today we really have a blockbuster, blockbuster Investment Tuesday about the topic that is on everyone's mind. I'm telling you, yeah, it's on everyone's mind. Everyone is talking about it. Every article I read is about it. President Trump talks about it. Elon Musk talks about it. It's just endless. And you know what it is. It's AI. It's AI. And in today's Investment Tuesday, we're going to do the AI boom blueprint courtesy of ATG Digital. All right, ATG Digital. And if you click on the link, right above me, it says AI boom blueprint, right? During Investment Tuesday, it will give you free access to our AI boom blueprint report. All right, free. All right, so watch out for when I periodically just put my hand up. So I'm not going to put my hand up all the time. So you got to go for it like right then. Okay, I'm kidding about that. But okay, I will put my hand up and there will be a link that says AI boom blueprint. And it is going to essentially connect all the dots to what I think is the critical understanding that most people are missing. I've been around markets for 30 plus years. I was around for the original internet boom, and people got that wrong because most people just can't see the forest for the trees, right? I mean, and so people threw money at all kinds of nonsense, right, and lost their shirt. They also threw money at perfectly good companies, but that were trading at such sky-high prices that they lost their shirts. And I see plenty of signs of the same thing going on right now in all of the names that all of you know and love and that are talked about all the time. I'm not going to mention it, but one of them begins with N, right? I won't even mention it. All right. And I'm going to tell you that these are the wrong places to be. The AI boom blueprint says no. There are better plays. There are safer plays. There are more certain plays. There are stocks where you are going to make big money without taking all of that risk, and you will get the benefit of this AI boom. Now, and I don't think actually all those popular stocks will get the benefit, because if you look back at the internet boom, it wasn't all the big advertised stocks that everybody loaded up on in 1999 that really gave you, what mattered, right? Okay. And, I was around for that. And I was an early investor in Google, early investor in Netflix. So I know a little bit about what I'm talking about. But stay tuned for the special AI boom blueprint. Just kidding. It will be there. All right. But let's quickly do the legal disclaimers and disclosures to keep our lawyers fed and happy. All right. This video and the content from ATG Digital is not investment or financial advice. It is presented to you as opinion, information, engagement, entertainment. Whatever you choose to do with it, remember, it's your responsibility because it is your money. Next, all ATG Digital content may contain errors, oversights, and mistakes. Understand that investment operations, they have significant risks, and that can lead to the loss of your principal, which means what? You can lose money, right? I mean, that's the simple way. If you don't give it to lawyers, that's what they mean. I, the owners, employees, contractors of ATG Digital, we own, we trade, transact in the securities that are mentioned in this video and all the content from ATG Digital. We do not take money from company managements, from crypto sponsors, etc., like many influencers do today, to recommend their stocks or crypto tokens. For better and for worse, whatever you're getting from me, from ATG Digital, is our unique independent point of view. Next, we put out an extraordinary amount of content. It was mind-blowing, really, given our small team We put out the Substack, which goes out on every market day. We put out Ballman Speculating on Spotify for those folks who like to listen to stuff in the car, in the headphones, while you're in the air. And then, of course, I'm on YouTube on a regular basis, like I am right now. Social media, I am quite active on X. We are reasonably active on Instagram and Facebook. Follow us in all these places. Finally, I should get this out because I always forget to be prepared for this, which is that you can actually become a member of this channel. So if you go to YouTube and you go to our YouTube channel, you should see this. Make it a little bit bigger. And you see there, it says subscribe in black there, right? And if you also see, let me navigate the tab. You see this thing here, it also says subscribe over here. And you can see all these folks. These folks have all subscribed. And if you subscribe to this channel, which is $9.99 a month, you get exclusive early access to our videos, right? Okay. So that is something that you can choose to do if you wish. You can also get subscriptions from ATG Digital, which we've got multiple tiers. Let's get that website up so you can see that. Because people write me and say, Paul, where have you gone? I'm so glad I found you. The thing is, like ATG Digital, we've actually been in business for almost 3 years now. So we have been here. The YouTube channel has been operating. I've been on X, but I guess for whatever reason, people had no idea I had the YouTube channel. But nonetheless, if you want subscriptions, atgdigital.media is where you would go. Okay, let me shut down some of these things because the AI boom blueprint has a lot of different tabs open. I got to manage all this. All right, now I got some serious notes here. Look at that. AI boom blueprint. AI boom blueprint. All right. Okay, I'm going to spoil some of the fun, all right, by saying, listen, I know everyone. Well, I just hit my monitor, and the camera's in the monitor. I know everyone desperately wants to think that chips are the critical factor, and that's really because of the price action on one particular stock, Nvidia, right? I mean, people are chasing this in our trades for some crazy high price. Reminds me a great deal of the internet bubble. And I know I will get some hate and trolls who'll be like, Paul, you're wrong. You're an idiot. Okay, that's all fine. Everyone's entitled to their point of view. You're entitled to my point of view. But my perspective is this, which is that just like in 1999, 2000, the internet boom required you to sort of like chase, if you will, the second bounce, right? I mean, what's the second bounce? In other words, the ball bounces the first time and everybody sort of like runs after that. But it's the ones at the second bounce, they actually get the ball, right? And from my view, from my perspective, electricity, which is like the most basic thing, right? I mean, nobody even is thinking of this. Most people are just like, that's dumb, that's too boring, that's too stupid, that's too obvious. Electricity stands at the center of the AI boom, right? And I'll say the AI boom is part of a larger, boom that is in the process of unfolding. I'll call it, the great new American industrial revolution. It's like the reindustrialization of America, right? For 20 years, we deliberately and intentionally chose to deindustrialize ourselves, send everything to be made in China, in Mexico, and all these other places. And now we're bringing everything back. Okay, we're not bringing everything back. We're going to bring like the important things back. And that matters. And so AI is part of this new American industrial revolution. the new American Industrial Revolution, right? And at the heart of this new industrial revolution, of course, is AI. Is AI. It's big, it's beautiful, it's incredible, and it's going to be amazing. But related to that in different ways and forms is also the reindustrialization. In other words, bringing back all this manufacturing, right? So US reindustrialization is like a second theme. And then there is the third one, which is a blockchain, right? Everyone can see Bitcoin, hitting new highs this weekend. Lots of stocks, lots of crypto tokens like Ethereum suddenly rocketing higher, right? People are buying in, and everything is going to go on the blockchain. This is going to be part of AI. This is going to be part of reindustrialization. All of these things are sort of reconnected to each other. And at the heart of all of it is electricity. You need electricity for AI, right? I don't even have to point out to you. Just go and do, an AI search. Go to Grok, go to ChatGPT, go to, whatever you use. Maybe you don't use anything, right? But the estimates are that AI by itself will consume 30% of all electrical supplies in the United States in the next, 7, 10, 12 years. And you're like, Paul, that's so far away. That's not going to matter. Listen, folks, it takes like 7 years to put up an electricity plant, right? So we're already out of electricity. If you live in Virginia, if you live in Maryland, your electricity bills are going up by 15, 20% a year, right? They almost took the grid down in June because we didn't have enough electricity. In other words, we're already out. Why? Well, we didn't anticipate the AI boom. Nobody planned for it. We also didn't anticipate that, hey, that was like a really brutal own goal to send all of our manufacturing to China and around the world. We're going to have to bring all this back. Well, that's going to require a lot of electricity as well. That's on top of course, all the things that we're already doing, which is what? Cloud computing, gadgets of various kinds, air conditioning, right? And then you add on blockchain, right? What is blockchain? What underpins blockchain? Well, it's electricity. You got to have all these, servers keeping, those blockchain networks up. Most of us think about blockchains as tokens, whose prices go up and down, but there is an actual economic activity that is there. Those blockchains are there to actually perform some actual utility, some actual purpose in real life, like keep data, safe, do smart contracts, transactions of various kinds. And that requires actually a lot of electricity. We didn't plan for that either. So you've got this AI boom that is unfolding, and people are chasing after chips. People are chasing after all kinds of things that are the first bounce. And those are bid up. Those are bid up. They are sky high. Everybody's chasing them. It's not where you're going to make money. It's not where you're going to make money. To make money, you're going to have to buy into something that is not bid up, where what is going to happen is not yet priced in, not yet discounted. That's the jargony word, right? And from my perspective, it's electricity. We just don't have enough of it. Keep checking your utility bills month after month, right? And you will see a steady and significant increase, right? And from time to time, if you see like, there's not enough power, there's brownouts, you start to see headlines, this part of the grid barely made it through, the summer. You'll know what I'm talking about. Anyway, getting back to my point, electricity sits at the heart of artificial intelligence. sits at the heart of reindustrialization, sits at the heart of blockchain, right? So if you want to really participate in what I believe is going to be it's a boom at which AI is at the center, but it's not the only factor, right? I mean, you've got AI, which is fundamental. It's an innovation that is, earth-shaking, monumental, I mean, momentous, as is going to be, absolutely astonishing in its long-term impact, but it's not going to happen overnight. It's just not going to happen overnight. No different than the internet, which didn't happen overnight. Why? Well, because you know what? There are these problems like, wow, we don't have enough power to feed all of the data farms. How are we going to feed all the power to the data farms? Yeah, that's a problem. Let's put up some headlines. I have seen comments. People say, Paul, we've seen what you've said, etc. But here you go. I mean, electricity prices may spike due to AI demand if U.S. doesn't boost energy output. Another story saying the same thing. And there is a report that has been released by the White House Council of Economic Advisors that found that energy needs of the AI data centers will exceed the total energy of many sectors to make some construction projects. The IEA estimates that by 2030, we're in 2025. Now, to you and me, measuring, returns second by second, minute by minute, looking at our portfolios day to day, 5 years seems like a crazy long time. Nonetheless, I can tell you in the time scales that's going to be needed to scale up artificial intelligence, this is not a long period of time, right? So this statement here, U.S. data centers will consume more electricity than the production of aluminum, steel, cement, chemicals, and all the other energy-intensive goods combined. Wow, right? I mean, and remember, all those things I mentioned, aluminum, steel, cement, chemicals, other energy-intensive goods, those are all critical for industrialization. So we're going to need more of that, right? So we've got, I mean, it's not yet a crisis, but we have a beckoning, major supply shortage, squeeze, where, the companies that are at the heart of this are electricity companies, natural gas companies. Why natural gas? Because they represent 40 to 50% of, of the most easy to put up electricity plants in the United States. To feed those plants, of course, you need pipelines, you need storage. So all the infrastructure around it, those are all boom areas that you would benefit from. These are all places where the market has not really priced in what I have laid out and what is in this story right here. Essentially, that data point, right, which is that by 2030, U.S. data centers will consume more electricity than the production of aluminum, steel, cement, chemicals, and all energy-intensive goods combined in a reindustrializing economy. Right? In other words, AI is not our only priority. We are, we're going to have to reindustrialize, and we need, we just need way more energy. So people are chasing after chips, but something more fundamental, or more basic, actually has greater scarcity. And even more importantly, the stock market, because right now is being led to some extent by retail traders for very short term. Generally, you talk about 2030, you talk about utilities, people like, you're an idiot, you're dumb, you're stupid, you'll just get hate, right? I mean, you'll get trolled, you'll get shouted down. So, Um, yeah, I mean, they're not going to respond to this, but this is how the big money is made. You are in early, you are in because you understand something that other people don't. And as they figure out what you have figured out and where you've accumulated at low prices, right? You've accumulated low prices. Now, as they come in, there's no cheap stock to be had, right? And now they are forced to bid prices higher, right? And that's where I believe, we are in this, AI boom blueprint. We are on the verge, really, of the people that are chasing all of the usual suspects, the things that cause a great deal of excitement. I think they're setting themselves up to be disappointed. And in the meantime, it's going to be something quite obvious in hindsight, as to where the real AI trade really is. And this is what you get by being in AI through electricity, right? You obviously get the side benefits of like, hey, if AI takes a little bit longer to work out, like nobody thinks, well, it'll take a little bit longer. What are you talking about? How could it take longer? Listen, I mean, companies can stop investing for a little while. There can be periods of time where, the focus goes off from AI. Well, and you've got a second leg of growth, industrialization, right? You've got a third leg of growth, blockchain, right? You're not just betting on one thing. So when you go for AI through electricity, you get really rising growth. Obviously, these companies are utilities. Nobody's pricing them for growth, right? And these are companies that are seen as, like, these are the sleepiest, most boring companies. They don't have any growth. Yeah, well, except for, they keep going up in front of their boards and asking for 20% increases and 30% increases. And this is going to continue for years, for many years. Why? Well, without those price increases, they can't put up new plants, right? So you want your AC to work? You want your computers to work? You want AI? You want ChatGPT? You want all the things that we take for granted? Well, you're going to have to pay up. And when you pay up, it is your utility that gets the benefit. Its stock price will go up. Why? Well, nobody really anticipated it. They're like, that's a shock. That shouldn't be happening. I mean, we thought that, the scarcity is here. No, the scarcity is in electricity. So you get rising growth, which is not priced in. Not priced in. Now, I mean, I used to get comments when I was at Banyan Hill. I still get some comments from folks who are like, well, Paul, I'm near retirement. I'd like dividends. Well, guess what? Utilities pay dividends. And yeah, you bet that as they get rate increases, they will raise their dividends because, why? Well, they're in the habit of paying out money and they have an investor base that expects dividends. And as they get rate increases, they will pay out more. So in addition to a rising stock price, you will actually have rising dividends come in as well. And then, as I laid out, partly because they are not bid up, partly because there is no expectation of growth. These stocks would have to go up a great deal for many years time for them to be anywhere near the speculative fervor that is currently there among the popular AI stocks. These are safer than other AI plays. In other words, let's say markets are never a straight line. If you watch my previous videos, I've been warning about an interest rate surprise, which, is not off the cards because I'm making this video. I mean, that's there. I'm just choosing to focus this week on, right, the AI boom blueprint, right? I mean, and markets are never a straight line. There's always ups and downs. There's always corrections. There's like mini crashes. There's still, this is all going to be within the context of a boom, an economic boom that's driven by these three things, the center of which is artificial intelligence. Industrialization plays into it. Blockchain plays into it. During those periods of time, I mean, people will probably be like, well, I'm going to buy utility stock. I mean, I know that like there's, these stocks are safe. So during periods when people are in a panic, yeah, these stocks probably go down less. So that's an additional benefit that's there. All right. Having laid out the overall blueprint, let's talk about the actual stocks themselves. All right. The first one is, it's this one. It's Expand Energy Corp, market capitalization of about $26 billion. And I can already hear the, Paul, it's $100 stock. I can't buy 50 billion shares of it and get rich instantly. It doesn't fit my jackpot mentality where I want something under $1, Paul, so I can buy 500 million shares of it and get rich in a heartbeat. Listen, folks, I can tell you it's very rare, right, for those nano caps and micro caps to work out, right? A lot of the biggest gains, like in the last 5 years, have come from companies that are worth hundreds of billions of dollars. The stock price didn't matter. Don't get hung up on this stuff. Really. Yeah, I mean, this stuff, will keep you away from incredible opportunities. It's totally okay to just buy one share. It's totally okay to just buy 2 shares or 5 shares, whatever. You do not need to buy 100 shares. You do not need a 5,000 share lot. You don't need 10,000 shares. It's okay to just buy 10 shares. It's okay. You'll still make a lot of money. Why? Well, this is a $25 billion company. It can go to, 30, then 40, and 50, 100 billion, 300 billion. That's how you make money. The market capitalization goes up. Focusing on the stock price itself is not the way to really go about making big money. Expand Energy. What's the play here? I mean, essentially, Expand Energy, which for those of you who are market junkies and historians, it used to be called Chesapeake Energy. And they merged themselves, Chesapeake and Southwestern Energy, and they transformed themselves into the largest U.S. natural gas producer. Right? And what is going to be the fuel for the next 5, 7, 10 years that gets ramped up the most as we try to satiate the monster, the energy monster that is AI, and that is and the energy monster that's going to be the U.S. economy, which is going to feed AI, expansion, reindustrialization, blockchain. Yeah, I mean, Expand Energy, they've got what everybody desires. So it's like, hey, I need natural gas. Who do I buy it from? Well, they're the biggest. We're the biggest. So assuming that I'm right, Expand Energy, very high likelihood of, generating huge, unanticipated, big jumps in sales, big jumps in profits, and with that, big jump in stock price as well. So that'll be stock number 1. All right. Next, I know this is a favorite. And again, some people will be groaning, oh, Paul, another stock that's like $80. Why can't we have $1 or $5? Again, I can only say the same thing I said last time. Don't focus on that. Focus on the opportunity. It's okay to buy 10 shares. It's okay to buy 5 shares. It's okay to buy 1 share. My son and daughter, they buy 1 share at a time. They buy 2 shares at a time. My son actually bought 1 share of Carvana when it was like $9. Yeah, I mean, that obviously, is fine. But this idea that you need to own like 300,000 shares to benefit, number one, you're taking too much risk. But I won't go on that rant now. Let's talk about Cameco, which is what? Well, I mean, this is the premier uranium company. Arguably, they are a monopoly. I know there's folks out there talking about other uranium, these tiny little companies, and I suppose they might all do okay. But listen, Cameco, The uranium boom, because of AI, because of industrialization, because of blockchain happens, we're gonna need nuclear power. And Cameco, they've got the most uranium in the world. I mean, it's not even close. There's nobody out there. Plus, remember, folks, all these small companies that are promoting themselves. Remember, uranium is obviously something that is quite sensitive. And there's a lot of expenses associated with handling uranium. Smaller companies, yeah, I mean, many larger utility companies, governments, whatever, are not going to deal with these tiny companies. So sure, they can promote themselves as like, oh, we're blah, blah, blah about uranium. The truth is that the vast majority of uranium is going to be bought from Cameco, right? While this is likely clear to most people that have been around in markets for a while, that Cameco, when I was at my hedge fund, one of my old mentors say, they are the Saudi Arabia of uranium. And that's still true. All right. Nothing's changed on that front. So you can chase after, less obvious ones and chase after speculation. But the greatest likelihood of making the greatest amount of money is still, with the biggest one that has essentially, from some perspective, a virtual monopoly on uranium. It's there. All right. Finally, EQT Corp. All right, EQT Corp. And you'll see these are all, 25, $35 billion. They're not worth $3 trillion. And that's my point. At this point in time, nobody really is thinking in the way that I am thinking. Nobody is presenting the scenario in the way that I'm presenting it to you. Obviously, it's possible I'm wrong. I don't think I'm wrong. I have a decent track record of seeing things sort of like appear before they happen, and then they happen, and then it all seems clear in hindsight. But EQT is another company that is in the business of producing electricity, and you can see they just bagged a deal where they will supply gas to a previously shuttered coal-fired power plant northwest of Pittsburgh. And this is not a small deal. I mean, this is a $15 billion deal. You see, $15 billion deal. All right. So the three stocks to benefit from the AI boom blueprint, which is really about AI, but more broadly, it's about really an economic boom, partially driven by AI, partially driven by reindustrialization, partially driven by blockchain. Central to all of it is one of the most basic things in American life, which is electricity. It's the most basic things for any modern economy, electricity. I got three stocks that, benefit in slightly different ways from this boom. First one is, I'll put these up again, EQT. There we go. EQT, which is the US largest natural gas producer. We need all of their energy to produce electricity. We need all the electricity we can get. So again, highest likelihood of making the largest amount of money, right? Most people don't focus on the first one, right? No one thinks, well, what's the probability of making money? Everyone assumes that if they pick a stock, the likelihood of making is 100%. No, I mean, the smaller companies, the nano caps, the micro caps, the probability of making money is quite low. Obviously, if it works out, you could make a lot of money, but the probability starts very low. Here with these size companies of 25, 35 billion, the probability of making money is really much higher. And given the scenario that the prices do not reflect this future where electricity is scarce, desperately needed, going to be repriced significantly higher for multiple years, you can also make big money. Obviously, that is my view. That's my opinion. Second one is Cameco, similar setup. And the third one is EQT. All right. you know what? I just realized I never put up the finger. Maybe from time to time I did, but if you would like all of this put together in a fantastic AI boom blueprint, which I think we'll throw in like an extra stock. I'll tell Dean, who's putting this together. We'll throw in one small little stock, right? We'll take something from the diamond tier that people will be like, okay. We'll throw in something from the diamond tier that's lower priced to make all of you happy. We'll throw that one in there, but click on the AI Boom Blueprint link up here. And we'll send that to you. Okay. I hope you enjoyed this Investment Tuesday. AI going to be huge, going to generate a huge new American industrial revolution. And at the heart of it is something that most people are just not looking at. It's just too obvious, but it is the path to big money. It's the path to big money. All right. Thanks for attending Investment Tuesday. Thank you and goodbye.